Welcome, everyone, to CoinRoutes This Week in Crypto. It is January 12th, 2024. I look at Bitcoin. It looks like it's flat for the week. So I guess not much has happened. What did happen, Carl?
That's funny. You'd think that, given the fact that Bitcoin hasn't moved since last week, but what a week we've had. Bitcoin's trading at 44,000. Upon all this ETF stuff, it touched 49K briefly, but what's coming to look like a pretty ugly daily top. However, obviously, it's still trading exactly where we started pre-ETF approval. Ethereum, on the other hand, up 17%, trading at around $2,600. Solana, AVAX, and other majors up around 7%. The stock market, we saw the Dow Jones trade at an all-time high for a little this week. The S&P nearly back to an all-time high, and same at the NASDAQ. Tech stocks had a phenomenal week. NVIDIA up 10.5% upon some chip release. Same with AMD. Gold practically flat on the week. DYDX as well, and oil sold off a bit, but still chopping it up for the past month or so. So we're going to cover it all. But Jacob, why don't you start us off with the insanity that was this week and what happened at the beginning of the week with the SEC and their Twitter?
Yeah, absolutely. I mean, like Carl said, crazy week all around for the industry. Overall positive, though. We're all obviously glad the ETF got approved. It's a step in the right direction. The manner in which it got approved was pretty funny. So apparently there was an intern that either forgot to disable or disabled 2FA or forgot to enable it in the first place. And the SEC Twitter was hacked. The SEC Twitter then released a tweet stating that the Bitcoin ETF was approved. And if you guys were watching the price action, it ripped up and immediately within a 1 minute candle, retraced the entire move and then about another 3 to 4%. So it was absolutely crazy to see that and wild for all of us because we catch a lot of shade in the Twitter space as not being regulatory friendly or not being adhering to all security protocols. And the SEC, one of the industry's what we view as a sure thing when the news comes out on Twitter, was hacked. So funny to see that, and makes me lose a little more trust than I already had in them, but crazy price action as well. What did you guys think?
Ronald Reagan's 9 most dangerous words in the English language. I'm from the government and I'm here to help. I mean, it's been proven time after time after time that the government doesn't do this stuff very well. I think my opinion on that hack and about everything is far better summed up than I could by Hester Peirce, and we'll put the link in the comments to this on YouTube. But her strong support for the approval order in the ETF basically was a vicious takedown of the SEC policies. And her point, which is extremely important, is that the only reason this was such a big ass story was because the SEC made it a big ass story. They should have just approved these things in the matter of course when they came up. It wouldn't have been a big deal, and the market would have done whatever the market's going to do. Instead, they did what P.T. Barnum would do, what a marketing huckster would do. They created this artificial insanity. And of course, then someone hacked it and made it even more insane. So, yeah, I mean, that's basically, how I look at it. The fact is the spot ETFs are better products than the futures ETFs. Both are better products than the grayscale closed-end fund. And the fact is it's long overdue for everyone to be able to invest in Bitcoin if they want to. Now, if they don't want to, that's a different story. But that's the merits of the investment should be what the market should care about and not what a regulator might be thinking based upon how they're feeling that morning.
Yeah, absolutely. It's funny to see too, BlackRock's ETF really didn't do much volume compared to the other ones. Do you have any color to add to which ones you think survive and the quantity out of the 11 that got approved, how many actually survive and how many actually have staying power within this market?
Yeah, I mean, I think that BlackRock did a fair amount of volume, and BlackRock, I've been watching. Unfortunately, I have to re-log in again. I've been watching this pretty closely over the last couple of days. The simple reality is BlackRock's trading with a tighter bid-offer spread on average than many of the other ones, and that does matter. So, you have to understand something, and it's very hard for people to get this. Bitwise came out with a funky commercial because they're crypto native, but you didn't see a single ad, a single marketing campaign, nothing from BlackRock yet. Fidelity kind of, sort of, because they've been in the digital asset space for a while, right? They've kind of been there, but it's different, right? BlackRock hasn't started. Now, why is that? Well, it's because it was a 3-2 decision, guys. Gary Gensler was the supporter of the industry. Now, not because he supported the industry, his comments afterwards were dissing it, but because he felt he had to. And they made it a 3-2 decision because they wanted to indicate they didn't want this product, but the court was making them do it. And that's why it happened. Now, why does that matter? It matters because the SEC could fine any firm advertising their products before it was approved. And so they didn't do it. But if you look right now, the volume, the BlackRock's ETF has traded 22.6 million shares. So volumes on 22.6 million shares, and I should have this up at the top of my head, 22.6 times is trading at 25. You're talking about 5 million. Yeah. You're talking about $565, million worth of, no, I'm getting that. Yeah. $565 million of volume is a fair amount for a brand new product. It's $500 million in a brand new product. That's pretty good. Fidelity is trading just a little under that. They're trading 11 million, but they set a higher price on their shares. It represents more Bitcoin. Grayscale, on the other hand, is trading an enormous amount, and that's the story. So the Grayscale Bitcoin, trust is traded 46 million shares, and the price is about 50% higher than BlackRock. So it's traded quite a bit, and it did quite a bit yesterday. So what does that indicate? It indicates people who've been waiting patiently to sell after the prices, kind of normalized. Now the joke's on some of them because Grayscale's at a small discount today, not quite as big as, and not even close to the way it was trading before it was an ETF, but still a discount. And that will end. There's only a certain amount of a certain percentage of that fund that's just selling because they're taking profits in the new tax year. The reality is most of the holders of that trust are hedged and are going to very slowly, like me in my tax exempt accounts, move it to the cheaper ETFs from a price point of view. But I certainly won't do it at a discount.
Dave, just to give you guys some numbers, across all 11 ETFs, we saw over $1.6 billion traded, which is, I believe, the biggest ETF approval volume we've ever seen, ever. I mean, this is bigger than gold. GBTC obviously counted for most of it, but BlackRock, Fidelity, ARK, and Invesco also saw a majority of the remaining 4.6 billion. I mean,
it matters, right? People need to understand liquidity is what matters for these things. The assets will come if the marketing is there. Now, there's another story that came out. The other story that came out was that Vanguard started, but it's also true with Bank of America, Citi, Edward Jones, and a couple of other brokers are not allowing investors to invest in these things, which is, I can't say it any other word. It's fucking insane. They let those investors invest in the futures-based ETFs. They let them buy GBTC before this. Now they can only sell it. So when it was a crap product that could trade at a 50% premium or discount, they let people buy it and sell it. Now they're only letting them sell it. There's no other way you could look at this. It's insanity. I mean, my friend Scott Melker has a boycott Vanguard trending on Twitter. But the truth is Vanguard's abandoned their core principle, and you can only guess as to why. Their core principle used to be markets are efficient. You should be able to invest whatever you want to. You should be able to do so efficiently and cheaply. That used to be Vanguard's mantra. Now it's we know what's better for you. I don't think that's going to play real well. Mm-hmm. But what that drove me to do is write this takedown of Commissioner Crenshaw's dissent. Why? Because my guess is that the brokers who said no to the Bitcoin ETF are doing their diligence, and they read that dissent letter and said, we don't want to be on the wrong side of this. We don't want to hurt our investors. So I took the time to literally line by line or argument by argument take down what she said. And the short answer is there's nothing there. There is nothing about these products that is at all dangerous to investors, with one possible exception: if you believe Bitcoin isn't going to be a good investment. But kind of that's what markets are supposed to do. Now, we all know what I think. I've said it every week. But the truth is the market should be allowed to say it. I mean, how do you feel about a broker telling you what you can invest in, guys?
It reminds me a lot of, Robinhood being their mantra was take from the rich, give to the poor, and then they shut down, obviously the exchange or retail exchange, shut down selling or buying rather um, for GameStop and
Mhm.
Nvidia, I think, or whoever it was. But yeah, I mean, it reminds me a lot of that. It's just ridiculous. All this entire week, you couldn't make up any of this, from the SEC, Twitter getting hacked, from Vanguard not letting people trade for their own reasons. I mean, how long can this go on? Bitcoin is obviously inevitable. I mean, how many times do we need to say it? It's grown to one of the most valuable assets in the world. And
Mhm.
now some of the biggest players aren't letting their retail investors trade it. I mean, it's concerning. And
But now,
is there
given all
any
that, though,
regulatory agency, Dave, that can enforce some rules on this? Are they violating any rules?
no, markets
No.
could do it. But I want to give Jacob his time in the sun. We've been beating the crap out of him for weeks about him being the bear. Now, I know you shorted it this week. I get it. But you feeling good about your predictions these days, Jacob?
I'm feeling really good. So I want to comment on something I heard Kevin O'Leary say, and it ties into my positioning in the market this week. He said this ETF news is obviously great for crypto, but to him, it's a signal that the industry is headed in the right direction, not a signal that Bitcoin's going to rip up to 55,000. So there were crypto Twitter was going pretty crazy, saying that Wall Street was the exit liquidity, having their fun. And there was a tweet I really liked where it said, of course, the first day that Wall Street gets to trade the Bitcoin ETF, it dumps 6% immediately in their face. True taste of crypto, which I thought was pretty ironic. But yeah, I mean, coming up into the following months, first off, as a company, we love volatility. As traders, we love volatility. So I don't expect any of that to subside. In terms of short term, medium term price targets, I think we haven't seen a washout yet. And we saw that one washout of leverage where it was just that crazy wick and then it got eaten up, especially on a lot of the altcoins. But I think healthy retracements are good. And if you look at the market structure at the previous bull runs, you typically see one decent healthy retracement of anywhere from 10 to 30%, and then a continuation higher. So I won't be surprised to see something like that. I think the market does need to cool off a bit, but overall for 2024, hate to say it, I am crazy bullish. So expect way further advancements in price discovery across the altcoin market and in Bitcoin as well.
Carl?
Doing price predictions so soon, Jacob.
Well,
It
no, I
sounds
mean,
like
look,
you're repeating everything
you
I
were
said
talking,
last week.
you would ask the question about regulators. Can they stop this? In terms of what the brokers are doing, no is the short answer. In fact, it's also the long answer that no, unless a broker in their terms of service says they're going to provide access to every national market system stock, in which case they can't do it. But there's no regulator. But given all that, I mean, given what we've seen, here we are. We're seeing rotations. This, to me, I said it this morning. I think this price action is not a washout. This price action is what we in crypto like to call alt season. You see a rotation from Bitcoin into Ether into other level twos, because the fast crypto money is like, what's my catalyst in Bitcoin? But the problem with Bitcoin, and if you look back at 21, when it made its all-time high and its double top of the all-time high, both times it started rallying just like it did this time. Both times it retraced basically 10%, which is literally what it did today from yesterday, from 48 down to 43. It's already in that 10% retracement range. It could be, as you said, it could retrace down into the 30s. But both times, with the wind at its back, it did rip. And ripping will happen as money enters the space. Ripping does not necessarily happen because the halving is coming, because usually the halving-based rallies are well after the halving.
Mm-hmm.
But this kind of accelerated the timeline. So I wouldn't be terribly surprised to see a major face melting rally more coincident with the halving this time, as opposed to in the summer, like it, quote, usually does. but it's this is only the fourth cycle, so not a lot of data points. But I
Dave,
do think that right now it's still very technical, don't you?
Mhm. Yeah, another question I'd like you to speak on, as with your background, obviously more than me and Carl. Could you speak to what you see with the Fed cutting rates, their proposed rate cuts in the macro environment, how that ties into Bitcoin and how traditional equities and the dollar tie into the price action of Bitcoin as well?
Yeah, I think that, and we talk about this every Monday on Macro Monday with Melker. James and I both think that there's some stuff in the financial plumbing that's destined to break in the spring.
Hmm.
And we think when that happens, the Fed will act. Until that happens, the Fed will do nothing. They're not going to raise rates because that would be political suicide. They're not going to cut rates because they don't really have the justification for doing it. That's generally what we think. But what does that mean? That means if something breaks, there could either be the Fed cutting rates preemptively, and so the markets rip, or it could mean the Fed is cutting because the markets got crushed. And let's face it, 100% of the time, when there's a major catastrophic event in the markets, the correlation goes to 1. Bitcoin may be uncorrelated now, and it certainly is, but its correlation will go much higher if everything starts dumping. So it really depends. I'm not an expert in financial plumbing. I just kind of play one on TV. But the truth is that there are risks in the economy, and things like the reverse repo facility and the Fed's need to borrow money are all big factors. I suspect at a minimum we have a neutral Fed environment, potentially accommodative toward the second half of the year. But I think the Bitcoin narrative is different. I think the Bitcoin narrative is really based upon something that we'll expound upon next week. But the teaser is, if asset allocation models start putting Bitcoin into asset allocation models, new money will come in. 3 guesses who's one of the largest asset allocation models in the world. Nope. Well, maybe they are, but I was going to say BlackRock. BlackRock. And they haven't done it yet.
We've talked about before that, is what is the United States regulatory body's impact on crypto in general, right? And so we've talked about how, the U.S. ties into the crypto sphere, which ties into other global governments. And what was really surprising is how the price of Bitcoin was kind of just toiled with as the SEC's Twitter got hacked, and all coins across the board. And it kind of is a testament to like the influence and scope of the United States regulatory bodies. I mean, we really got to see firsthand how much power they have over the prices, the industry as a whole. And that was surprising and concerning to me, both. But I mean, we learned a lot.
Yeah, one factual data point is that the US dollar on the hack day, the US dollar based pairs moved dramatically more than the tether based pairs, meaning all the action was here. Now it was US hours, so that's part of it. It also is true that the premium now discount or fair value on the CME futures has been incredibly volatile. And so there's all sorts of things, which is one of the funniest arguments, because it basically proves why a spot ETF is better than a futures ETF, because a futures ETF has more volatility. But that's besides the point. That water under the bridge now, but it is worth understanding what's been going on in the plumbing. So the U.S. has had an outsized.
Dave, I think this might be a good time to do a CoinRoutes product spotlight about how much value our clients have found this week, especially as different funded pairs like Bitcoin to Tether, like Bitcoin to USD, and being able to spread trade, right? On top of all of this, our clients have found so much use and are thrilled with our products so far. I mean, this week, especially given all the volatility. And sorry, how to cut you off.
No, it's not a cutoff.
It's my job. It's my client success is my job, and our clients are thrilled.
Well, absolutely. I mean, look, the fact is our clients have traded over $1.5 billion through our platform in the last 2 days. And more than that, actually. I mean, we're hitting all-time records, and the reason is because the market has been perturbed. There's more money looking at different things in the market. It's not all Bitcoin, and it's not all Bitcoin dollar. It's not all what the SEC is looking at. I mean, to put this in perspective, we just told you how much was traded in BlackRock their ETF product for Bitcoin. Well, our crypto platform traded substantively more than got traded in that one ETF. And those are, for a small software company, those are really big numbers. So it is important. I mean, Jacob, you're talking to clients too. I mean, you're hearing the same thing, I assume.
Yeah, absolutely. I mean, the biggest thing is, right, and I'm going to quote Hal Press. I was listening to a podcast from him. He's a figure I follow on Twitter, and he said crypto is one of the most liquid, inefficient markets. And with that comes major opportunity, especially with a product type like ours, where you have exchanges around the globe. It's not an equities market where everything exists within a 90-mile triangular radius, right? So you have so much opportunity just between product types, and volatility only amplifies that. Now, it is complicated to access that opportunity. And our goal as a platform and as a software company is to make that easy for our clients. And not to toot our own horn, but we've done an amazing job. And just to highlight, we've been stable this entire time. Now, it is, as a software company, it's not easy to stay stable, connected to 70 plus exchanges with different market data feeds. They're dropping, volatility causes latency. And throughout this entire rally and dump, we've remained stable. So that is something notable as well.
And not all EMSs and exchanges, for that matter, can say the same thing. So the stability part is huge.
Yeah.
Okay, prediction time, guys. You want me to go first or last this week?
Well, it sounds like Larry. Yeah, go ahead, Dave. Take it.
No, because I've been going last, which is not really fair. I think we are stuck in a range for the next week or two until we start seeing some inflows. I think 42 is very strong support. I said it last week. If we broke through 48, which we didn't, we touched it, but fell immediately thereafter twice, both on the fake and then the real news. Then you can see 54, but doesn't feel like that's likely. So it feels like we're kind of where we are until more money comes into the system. I would not be surprised to see more money come in, but I think it's going to take a few weeks. I think you're going to wait for the marketing machines to ramp up. I do think that I'm going to be more bullish in a few weeks as we see this stuff play out.
Yeah. Carl?
Yeah. Well, I mean, look, Bitcoin's been trading between 40K for 2 or 3 weeks, maybe more. But obviously, when Bitcoin chops it up like that, money just rotates into the lower caps, right? And we saw F rally massively. We've seen Link rally massively, Solana, AVAX. I think that kind of trend continues so long as Bitcoin hangs around here. I mean, if you were able to catch that Bitcoin to Ethereum rotation, you're up massively right now, and I think that is kind of going to be the best play for the coming weeks, as long as Bitcoin can sustain these prices. I think that in general, it's best not to try and time the market, but just to get the best. I mean, sort of a general direction to it, and I think that yeah, we're probably going to see a pullback in the next couple of weeks, but I don't think that it's going to be too significant. If 6 months from now you're just going to wake up and Bitcoin's going to be where it needs to be. I don't think that, given the fact that we've approved 11 ETFs, we're going to be trading down in the 30s anytime soon. So yeah.
Yeah, it's a good prediction. I tend to agree with both of you guys for various reasons. Dave, for your point about the range, I completely agree. I think 42 to 48, at least on Bitcoin, is where we're pinned. As a trader, what I'm paying attention to is what the ETH-BTC pair is doing right now. That is typically a leading indicator of what altcoins are going to do in their performance versus Bitcoin. And something I've noticed that has been interesting is just how some of these different projects perform versus others. I think there's major opportunity when it comes to looking at coins that are going to outperform others, and you can beta hedge, right? So if you look at TIA, Celestia, when Ethereum and Bitcoin were dumping, it went up 5% today. WorldCoin, similar story, right? It maintained price levels while ETH and Bitcoin were dumping. So I'm going to be trying to pay attention and catch on to the products that are outperforming the market, and also paying attention. BTC did hit a pretty significant resistance at 0.06. So we will see what happens with there. But I would not see, looking at past price history of it, it typically sustains its rally for a very long time until a major turning point, aka when the bear market starts to pop its head in the door. So I wouldn't be surprised to see it continue, but all interesting.
Would it be too ironic if the very top of Bitcoin was when the ETF got approved? I think you couldn't even write that in a story.
Well,
But
no, you can, and that's actually why.
Is usually the most likely, as Elon Musk
No,
said.
but that's a really good point, Carl, and thank you for mentioning it, because actually the reason I'm more bullish and don't see a dump like a lot of people do is because everyone's kind of saying, well, the high in the Bitcoin in 17 was when we approved the futures, and the next high was when we approved BITO. So now we approve these, that's going to be the next high. There's a huge difference here. Those were trading products. Now, the futures were the only thing you could buy. Well, the only thing you could use to short Bitcoin. If you were a U.S. investor, you couldn't short Bitcoin until those futures were done. So it was massively biased towards being a dump ground. BITO, same thing. In a brokerage account, in an equity brokerage account, it was the only way you could short Bitcoin. Well, these don't give you any particular ability to short that's any different than we'd already had. But it is an ability for people to be able to allocate assets to it. So I think this is going to be I think it's more of a head fake down as part of a rising market into the halving and beyond than it is that kind of big thing that you were just saying. But I've seen that narrative that you just said made by so many people.
What?
It's
this
almost
time it's going to be different?
What? No, I
This
don't
time it's
know.
gonna be different.
Forget this time is different. It is different. It's not that it's the same thing happening again. It's a different thing that people are saying, oh, that looks like it's the same, but it's not. And in investing, I like to be contrarian. I hate buying when everybody's bullish. I just do. Even if I think they're right, it bothers me. Everybody's bearish now. I haven't seen one person calling for anything other than, oh, we got to sell the news. Oh, this was the top. Oh, it's going back down again. I haven't seen one pundit being bullish in the face of this in a trading side. The only ones that are bullish are the fundamental guys. Mark Yusko, who is beating the drum for much higher prices, who I happen to agree with, but there's nothing that can happen in the market that's going to change his opinion. Right? That's the thing. So I do think for our clients, understand that going with the herd, not so smart. But what you don't have this time, and it did happen in both those other cases, Carl, both of those times, the perpetual swaps were trading with high funding rates. They were trading at premiums. There was liquidity. There was leverage being built up in the system to get washed out. We don't have any. All the leverage got washed out on Wednesday. All of it, or Tuesday, whatever day it was that the SEC, I mean, it was $100 million got washed out or so really quickly. There just is no leverage. And it takes weeks to build that up into any size. So that's why this is different. Not that it's different because, this time is different. It's different because the circumstances are different.
I think that in volatility we trust. Am I right?
Well, it's bound to happen. You're going to be up and down. I think we're in a range. I think a lot of people are putting on big levered bets. I think there's more leverage going on to the downside bets, which I hope that's true, because if so, that will create the cannon fodder for the kind of rally that I'd like to see in a couple of weeks. I'd like to see 2 or 3 weeks of the crypto speculators being short and selling their crypto to the TradFi guys buying it via the ETF, which is, by the way, exactly what crypto Twitter is yelling at people not to do. Generally, when people are yelling at people not to do something, it's actually happening.
Dave, last question. How long before you think, we've talked about how these companies have to deploy their sales forces to really get this ETF adoption spun up. Timeline wise, is it hard to predict? What would you say our viewers can expect in terms of these inflows?
I think that I don't know the answer to your question, so I don't want to guess, but I will tell you this. Trace the history of every major IPO pop and look what it does over the succeeding month. Virtually all of the good ones have skyrocketed since that point, but almost all of them have an IPO hangover for anywhere from 2 to 4 weeks. I would not be surprised to see a 2 to 4 week hangover here.
Got it. Awesome. Well, thank you guys for tuning in this week. And like always, comment, like, subscribe, And something we were thinking about is if there's projects you want us to review or price action you want us to talk about, drop in the comments. We're happy to go over it. But till next week, exciting time to be in this industry. We'll talk to you guys soon.